Okay, so for question 1, for A, it says to prepare a schedule of expected cash collections for November and December. Okay, so first we have to key in the sales budget, the budgeted sales for November, which is 340,000. And then for December, it says 36000. And then we total it up like this, equal sign, and then press this cell, and then plus this cell. Just do it like that, and then you get the total, which is 700,000. Okay, and then we have to jot down the account receivable for November, which we get from here, from this balance sheet, which is 83 and 200,000. And then for December, it doesn't have account receivable yet, so just key in 0, and then the same as before, just total it up, these cells plus these cells, and then you get 82,200. And then for the collections in November sales, we do it like this, because the collections are expected to be 75% in the month of sales and 25% in the month following the sale. So for November, we multiply 75%, which is 0.75, with multiply with the sales, the budgeted sales of November. So we press this, and then we press enter, we will get 255,000. And then for December, which is the remaining 25%, just key in 0.25, which is 25%, multiply with the sales, and then we will get 85,000. And then we total it up, total this plus this sales, we will get 330,000. Okay, next for December sales and November, there are no collections of December sales in November, so we'll just put 0 here. And then in December, there are collections, which is 360,000. So we do it like before, like here, 75%, so we just put it like this, 0.75 multiply with, sorry, I forgot to put equal sign here. Okay, and then we will enter, and then press enter, and then you get 250,000, and then total it up like always, like before, total it up like this, and you get that. And then you have to total the cash collections, which we just use the data from account receivable until December sales. So for the sales amount, we just ignore it. So to do that, we just do it like this. You do it sum, and then from here like this, and then like that, and then close bracket, and then we press enter, and then you get 338 and 200,000. And then the same for December, just do the same thing. We press the cells like this, and then drag until here, and then close the bracket, and then you will get 355,000. And then same here, we just total it up, we don't have to drag, we just total it up, and then we will get 693 and 200,000. So the total cash collections for November is 338,200, and then for December is 355,000. So the total cost for November and December, the total cash collection for November and December is 693,200. Okay, so next for the B, which is to prepare a merchandise purchases budget for November and December. Okay, so I just continue it here. Okay, so to do the budget, we have to key in the data for budgeted cost of goods sold. Okay, so for November, cost of goods sold is actually says here, the cost of goods sold is 71% of sales. So to key in the data, which is 71%, 0.71 multiply with the sales of November, the budget sales, which we will get 21400. And then for December, it's the same. Just do it the same, which is 71% multiply with the budget sales of December, and we will get 255,600. And then the same as previously, we just total it up like this, and then we will get 497,000. And then we must add the desired ending inventory. So in the question, it says the company desires an ending merchandise inventory equal to 75% of the cost of goods sold in the following month. Okay, so for November, desired ending inventory is like this, 0.75 multiply with the budgeted cost of goods sold of the following month, which is for the December, which is this. We multiply it, and then we will get 191,700. And then for December, we have to know the budgeted cost of goods sold for January, right? So we 0.75 multiply with 3 for the January. The budgeted sales is 350,000. So and then we multiply it with 71%, because we want to know the budgeted cost of goods sold for January, right? So with 71% like this, and then we press enter, we will get 186,375, and then we just like total it up, both of this, which is both of this, and then we enter, we get 378 and 075, and then we just total up both of this row. So just total it up like this, and then we will get 433,100 for November, and then we just copy the formula. If you want to check, just check it here in the formula section, which is true. H1, H11 plus H12, we will get this, and I11 plus I12, we will get this. Okay, so next we have, so now we know the total needs for each month. So next we have to minus with the beginning inventory of the month. So the beginning inventory of November, we get it from here, which is from the October balance sheet, which is 181050. We enter just like that, and then for the beginning inventory for December, we take this number, which is the desired ending inventory for November. So just equal sign and tap this, just click this cells, and then we press enter. It's the same number as this. So just total it up like the same, which is this plus this, and then we will get the number. Okay, so now we have to total, we have to like minus total needs, which is we have to like total needs minus beginning inventory. So we do it like this, 43, this 43 minus this, which is beginning inventory, and then we will get this. And then just like I showed you before, just drag this thing, so the formula will copy. So now we get to know the total required purchase is 502,325.
Next question, C. Prepare cash budget for November and December. First, we start off with cash disbursement for merchandise. The amount is taken from account payables given in the question, which is 196,200, and then we have to add other monthly cash expenses, which is given in the question, 21,400, to get the total cash disbursement of 217,600. For beginning cash balance, the amount has also been given in the question, which is 22,200. And then we add with total cash collections of 338,200 taken from the schedule of expected cash collection in question A. Add them both and we will get total of cash available, which is 360,400. Next, we have to minus total cash available with amount of cash disbursement that we have calculated above to get the excess or deficiency of cash. For this case, it is an excess of 142,800. Then, we will get the total ending cash balance, which is also 142,800 because we don't have any financing. In cash budget for December, the cash disbursement for merchandise amount is taken from the required purchases of merchandise purchases budget in November. Why November and not December amounts? Because in the question, it has stated that payment for merchandise is made in the month following the purchase. And then, as usual, we add other monthly cash expenses of 21,400 to get total cash disbursement of 273,450. For the beginning cash balance amount, we forward the amount from the ending cash balance that we have calculated in November, which is 142,800. We add up with total cash collection taken from the schedule of expected cash collection in December of 355,000 to get 497,800 total cash available. Our total cash available minus cash disbursement will result in excess of 224,350, and that is also our ending cash balance for December.
So next question is D, is to prepare budgeted income statement for November and December. Okay, so to do that, this is the template I have done here for the budgeted income statement. So first we need to key in the data for budgeted sales. So we have actually key in the budgeted sales for November. So we just put it like this, equal signs and G3, and then press enter, and the amount will be the same. Or you can just copy, but I need to do this so that you guys will understand it. Okay, next we have to minus with cost of goods sold. So we have calculate the cost of goods sold previously. So we just copy the amount from here. Just copy it like this. Just equal and take the amount from the cells. This is so that the amount stays the same. Okay. And then we have to calculate the gross margin, which is the budgeted sales minus cost of goods sold. So we do it like this. This sale G18 minus G19. And then we'll get 98600. The same goes for December. And for the total, we just do it like this. And then we will get the total for the gross margin for both month. And then we also have the total amount. So after we get the gross margin, we have to minus with other expenses, which is other monthly expenses and depreciation, which is have been given here in the question. It says that other monthly expenses to be paid in cash are 21 and 400,000, and then for the monthly depreciation is 21 and 200,000. So we just key in the data here. For other monthly expense is 21400. This for depreciation is 21,200. The same, just copy it like this. This is so that you won't like do double work, and then you just need to total. Just total like we did before, like this, and then we will get the total, just the same. Okay, and then we have to calculate the net income, which is doing like this, which is the gross margin. We take the amount of gross margin for November, and then we minus with each of these expenses, which is just minus this, and then minus depreciation, and then you will get 56,000. And then the same goes for December. Just do it like this until total, and then you will get 117,800,000. So the net income for November and December, the total amount is 117,800, and for the each month net income for November is 56,000, for December is 61,800,000.
The last question for this section, which is to prepare budgeted balance sheets. For the first item in assets, we get the cash amount from the ending cash balance in cash budget, which is 224,350. For account receivable, it is 25% from sales in December, which is 90,000. Inventory amount is taken from desired ending inventory in December from merchandise purchase budget. Last item for assets, PPE amount is 963,600. To get the amount, we take the PPE amount in the question, which is 1,006,000 minus total depreciation 42,400 in income statement. Total assets is 1,464,325. Next, for account payables, the amount is derived from merchandise purchase budget, which is 250,275. For common stock, we take the amount from the question, it is 640,000. And lastly, retained earnings, we add up the retained earning amount in the question and net income from income statement, we will get 574,050. After we add up accounts payable, common stock, and retained earnings, we will get our liabilities and equities amount, which is 1,464,325, same as total assets amount. And with that, we have completed question 1.
So we have to find the direct labor rate variance. Here, we have analyzed that the actual rate give for these two times, overtime and also the normal time, given. The actual rate is for overtime is 7 ringgit and 20 cent, and then the normal time, the actual rate is around 7 ringgit, and then the standard rate is 7 ringgit for overtime, and also normal time it's the same as the actual rate, as its actual rate, 7 ringgit. The actual hours of for overtime, it calculated around 1,400, and normal time has 2,000 actual hour that has been used. For standard hour, it has been standardized that the overtime should be 3,400, and also the normal time is 3,200. To calculate direct labor rate variance, we use the formula of actual hour times with the actual rate, and then the second one is the actual hour times with the standard rate. Okay, we calculate for overtime and also for the normal time. Overtime, so 1,400 the actual hour times with the actual rate, which is 7 ringgit and 20, Another one is 1400 times with 7. And then we minus both of it and we will get 280. So it become unfavorable. Because if we look at the actual rate here and also the standard rate, okay, so it's exceeding the standard rate for overtime. So we can say it is not favorable, it's not efficient. So for normal time, if we calculate it, we will get 0. Direct labor efficiency variance. Okay, the table, okay, for the actual rate and standard rate, also actual hour and also the standard hour, it's like same as before. The formula actual hour times standard rate, and then the second one standard hour times with standard rate. Okay, here the calculation 3400, the actual hour times its standard rate, which is 7. Another one is 3200 times with 7, the standard rate. Standard hour times its standard rate, minus both of it and we get 1400. It become unfavorable. Okay, so here the standard hour is only 3200, but it is exceeding the standard hour, which is 3400. Direct material price variance. We have two materials here, iron and also copper. Okay, so for actual price for iron, it is around 2 ringgit and copper is 3 ringgit and 10. Standard price for iron, same as iron, same as the actual price of iron, which is 2 ringgit, and copper for the standard price is 3 ringgit. The actual quantity for iron, 3,900 and 2,600 for copper. Standard quantity for iron is 4,000, copper is 2,400. To calculate direct material price variance, the formula is actual quantity times the actual price, and then another one is actual quantity times with the standard price. Right. So we calculate first for the iron. We insert the amount in the formula and we will get 0. Copper, 2,600 we get from the actual quantity times with the actual price, 3 ringgit and 10. Another one is 2,600 actual quantity times with 3, the standard price for copper. We minus both of it and we will get 260. It is unfavorable. So here we look at the actual price for copper and the standard price. Okay, so it is exceeding the actual price that company had to incur. Is 3 ringgit and 10, but not 3 ringgit. So it become unfavorable. Right, D, direct material quantity variance. The actual price for iron, okay, all of the information same as before. Okay, in question C, but I forgot to mention that to calculate the standard quantity for iron and also copper. So for standard quantity for iron, we have to times the quantity, the direct material quantity times with the units that have been produced. So here is 800. Okay, the units have produced, and then 5 is the unit or the unit of quantity for iron. Right. For standard quantity of copper, so it has around it has been standardized around 3 quantity per units that have been produced. So units that have been produced is around 800, right? So 800 times with 3, so we will get 2,400. Okay, so actual quantity for iron and also copper has been given. Okay, we took the amount that company have used. Okay, used. So the formula for material quantity variance. Alright, so we took the focusing on the quantity. Okay, so standard actual quantity and also the standard quantity. And then we times it. Okay, both of these in this bracket, so we just times it with standard price. Okay, so we look at iron, 3,900, the actual quantity times with the standard price, and then for standard quantity times with the standard price also. The answer is negative 200. It is favorable. Okay. So copper 2,600. Okay, the actual quantity for copper times with 3, the standard price. Another one is 2,400 times with 3, the standard price also. And then we will get 600 unfavorable. Okay, so here we look at the quantity here, 3,900, and then here is 4,000. This is for iron. So we can see it is it use not that many than the standard. Okay, and then for the copper here, the standard quantity should be 2,400, but it has used more than 2,400. Okay, more than 200, so here become unfavorable, and then here become favorable.
Okay, next, overhead expenditure variance change. So the formula we use is actual hours multiplied with actual rate minus with actual hours multiplied with standard rate. So the actual hours multiplied with actual rate is 12,000 minus with actual hours, which is 3,400. We get from 2,000 plus with 1,400, and then multiply with 3 ringgit standard rate. After that, we get 10,200. So 12,000 minus with 10,200. So we get 1,800 unfavorable due to the actual rate is more bigger than the standard rate. Okay, so next we need to calculate the overtime. So the overtime hours is 600. So multiply with 20 cents. So we get 120 unfavorable. So for the total, we need to sum up for both variable manufacturing overhead rate variance and overtime. So for the variable manufacturing overhead rate variance is 1,800 plus with 120. So we get 1,920 unfavorable. For overhead efficiency variance change, the formula we use is standard rates multiplied with actual hours minus with standard hours. So we get the standard rate is 3, actual hour is 3,400. We get from 2,000 plus with 1,400 and minus with 4,000 the standard hour. So we will get 10,200 minus with 12,000. So the answer we get is negative 1,800 favorable due to the standard hours is more bigger than the actual hours. For budget variance expenditure for fixed overhead, formula we use is actual fixed overhead minus with budgeted fixed overhead. So the amount actual fixed overhead is 8,800 minus with the budgeted fixed overhead 8,000. We get from 4,000 multiplied with 2 ringgits. So the answer we get from minus the 8,800 with the 8,000 is 800 unfavorable due to the actual is more bigger than the budgeted fixed overhead. Okay, lastly, for volume variance on fixed overhead. So the formula we use is budgeted fixed overhead minus with fixed overheads applied multiply with standard hours multiply with standard rates. Okay, so for the budgeted fixed overhead, we get the amount from multiplying 4,000 with 2 ringgit. So the amount we get is 8,000. And for the fixed overhead applies, we multiply 800 with 4 hours with 2 ringgit, and we get the amount is 6,400. After that, we minus both of that. So 8,000 minus with 6,400, we get the answer is 1,600 unfavorable due to the budgeted fixed overhead is more bigger than the fixed overhead applied.